Let's connect with the promoter of Landmark, Sanjay Thakker, to talk about how things are moving for the luxury car space. And the company's gone listed. So we've got him back to talk about how things have changed for him. The first time I think he's coming out with his results in the listed avatar. Sanjay, good morning. Thank you for joining us. Now, FY23 has been great in terms of revenue growth, and it's been a 36% growth. What would you attribute this growth to? Is it small base or this growth is sustainable?
Yeah, so our growth has been upwards of 36% to be precise, year on year. I wouldn't say that it has come on base of a low base. I mean, that's not how I view it. Several things have happened. First of all, India and Indians are buying more premium and luxury cars, which is something which we have been seeing, and I don't think there is any doubt on that matter. The average selling price of the vehicles that we are selling has also been constantly growing and going up every quarter, every 6 months. So this is something which has happened. Another noteworthy thing which happened was that our after-sales revenue has grown at 25% year on year. We have had a 20% CAGR growth for the last 8 years. This year, we are happy to report that we have been able to grow at 25%. And this is the high margin business that we all know. Now, coming to the financial year 24, say it's obviously depends on how the world economy shapes up, how the Indian economy also fares, because we are also dependent on the consumer sentiments to an extent for selling of vehicles. As we speak, the sentiment is decent, it's reasonably strong. We believe that the growth that we have seen in the past, we will try to kind of sustain that kind of a growth and kind of have a path where for several years, why only next year, we show much decent and better growth than the auto industry.
Right. Sanjay, you've been adding new stores as well, as we understand, or showrooms in your case, as well as shutting down the non-necessary ones as well. What are the addition plans for the full fiscal? And what about your expansion plans in Tier 2 cities?
Yeah, sure. So I think what one needs to, because we are the only listed auto dealership chain, a lot of people are asking me these questions about the outlets. And I would like to take this conversation away from that, because the best thing that can happen is that sweat the asset more rather than opening another outlet. So if I'm able to generate sales or service revenue which is from the same outlet, then it is much better than investing capital and then having a lower ROC. So our focus is to basically sweat the assets more. We will partner with new OEs this year. We will also grow geographically, but we are not putting any number of outlet growth. The turnover and the profitability are the two matrices which people will have to focus on. Adding new outlets and losing money is not what we will focus on. We'll be very careful when we acquire things or when we set up new outlets, and we will see to it that they are profitable more or less immediately. So that's going to be the focus. Number of outlets beyond a point would not matter in this business.
Now, given that there's been an increase in competition, we've seen a lot of luxury car makers opening, a lot of their showrooms. They've been expanding their footprint, launching new products. What about the competitive intensity? How does Landmark plan to stand out?
Yeah, as far as the luxury car market is concerned, it is, yes, it is holding strong. So Mercedes-Benz went ahead and announced their first quarter numbers only last week. And they have been at a record high, some 4,600 odd units. And that's a significant growth over last year, and it's at an all-time high. The order intakes, which is the important parameter that we track, are holding steady and are growing. Though we are into one of the leaner periods of a year. Historically, the April, May, June quarter is the lean period for the industry. We are not really seeing any kind of a significant slowdown in our order intake over even last month. So really, as far as the luxury is concerned, I believe that we are touch wood insulated so far. As far as the vehicles below that are concerned, the production level for the from the OEs and for the industry is going up. That's what people have been a little concerned about, that the demand will be there, but the supply may be more over the demand. Now that's what we are seeing in some of the brands that we represent, some of the brands that we do not represent. Many of the brands that we are not representing, we are seeing from the market sources, we are finding out there the stock level at dealerships have increased. But that is exactly why I'm saying that one needs to be careful about what one does. There is a significant upside that we see in our business if you do it in a disciplined way. This is a very predictable business if you are disciplined. And I want to make Landmark as a very disciplined company, which will give focus on where we allocate the capital, how we sweat the assets, and how we get the best buck for our investments.
23, we added a new brand with BYD. In FY24, can we see any more additional luxury car brands coming on board?
We surely will add. Every year we have been growing. We will not only add with our own existing OEs, I'm sure we will add a few more OEs which fit into our bill and where we can add value. Landmark will also focus meaningfully on the pre-owned car business, which has been a missing piece in our arsenal so far. So this is something also what we will do, and maybe in your next quarterly call or wherever we have, I'll be able to share some numbers and give you some color. So there are things that are looking exciting. We need to put our head down, don't get lose focus, and do the right thing. And there are a lot of good things will happen to us and Landmark.
You did touch upon the pre-owned vehicle segment. Tell us how the sales were for FY23 and how much growth potential this segment holds in the longer term.
So Landmark hasn't been so far a very meaningful player in the used car space. Now this is something that we intend to change starting this quarter. And just to give you some background, 30% of the used cars sold in say USA are by the new car dealers. In India, this number is maybe 4 or 5%. Now, there obviously has been some reason for this, and that reason was in the last few years that we had some startups with a different business model where they were looking at the GMV rather than the profitability in the business. Now that I think the world has become more sane, and those kind of businesses are not aggressively pursuing and trying to burn money to get market share, then this is the time to enter this business and do profitable business. The used car business will need to become a meaningful contributor to all our outlets, and the focus of Landmark will be to make that now that the time has come for that.
And you've also come up with the online sales portal, and we're seeing, a lot of OEMs establishing their own portals. So do you think that this touch factor dominance is now going to be taken over by the comfort of buying a car online, especially when we see people traveling from tier 2 cities to metros?
Yeah, so Landmark has a 35-member team who is looking at technology with a chief technology officer coming from a leading OE. And this is something that we have been focusing on as an organization for some time. We do online bookings. All the OEs obviously are also focusing on that. Though my personal take is that there is a lot of research which people do for vehicles online, but the buying decision is purely based on test drives, on touch and feel, and that I don't think is going to go away anytime soon. So online medium for automobiles is going to be a kind of a helping hand, as to say, and that's what we will use it as. So the reach that you are talking about, we have resident representatives. We will, for some of the brands, we will be opening smaller outlets to reach out to the markets that we are not present. But that since we haven't declared the plans to the investors, I will kind of hold it till our annual results are out, and we will kind of give a more detailed plan as to how we are going to be addressing this question.
All right. Sanjay, really appreciate your time and thank you for joining us. Krishi Bhagwani joins us, CEO and founder of